Hey everybody, and a warm welcome back to our channel at Brew Krebs with me, your host, Brew Krebs. Have you got questions about commercial loans, curious about renovation loans, or outside of the box types of loans? Are you self-employed or had issues qualifying for your regular types of home loans? Today, as we continue to explore the world of real estate on our YouTube professional series, we're diving deep into commercial lending to see some different ways to fund your projects that don't require those traditional methods and maybe not as much on the income verifications. Should you have any questions, of course, as you go throughout the video, whether they're for me or for our guest Ray, don't hesitate to drop them in the comment section below. We are eager to address your inquiries. Moreover, if you're seeking a more personalized discussion, we're just a message away. Reach out to us anytime. We're here to engage in a detailed conversation and to offer the clarity that you're looking for. Today, I'm thrilled to have Ray Johnson with Barrington Commercial Capital with us. He's here to guide us through the essential details you should be aware of and share his insights on current market dynamics. Ray, it's really a pleasure to have you here with us. Thank you so much for being here with us today.
It's my pleasure to be here, Brew, and thank you for having me, and great to have the opportunity to speak to your audience.
We're very glad to have you here with us. Give me a brief overview of what it is that you do, the company that you work with.
Sure. My company is Barrington Commercial Capital. We are a non-bank commercial lender. We specialize in real estate transactions and also business loans for business owners. So we work directly with investors, builders, developers, and business owners for their borrowing needs for financing projects. That could be anything from an expansion of a business opportunity or starting a business or a franchise or what have you, or something as simple as a fix and flip deal here as an investor. So, and everything in between.
Well, let's dive right into the burning questions. You know, everybody's got those about securing financing, whether it's for their business or for, a project flip or something like that. And keep in mind, audience, I'll be delivering these in quick succession. So make sure that you stay with us to the end to catch every detail, including the current thoughts and concerns of people that are out there in the marketplace. And Ray, we talked a little bit about your company. How long have you been in the business?
I've been in the business for 30 years, actually, in finance. My background is finance and accounting, but I've been doing commercial loans for 25, 30 years. So we've been in Barrington. Barrington, we've started 10 years ago.
Okay. And you mentioned a little bit about the types of loans. Go a little bit more in depth about, for example, for my renovation people, because we have a lot of folks that do renovations in our audience, and then also we have folks that are other business owners. Maybe talk to us a little bit about what types of renovation loans that you might offer, and maybe talk about a little bit more about what the types of business loans are that you offer.
Sure. Let's start with the real estate. Obviously, from the real estate perspective, small projects that we would probably assist people with would be your fix and flip type of loans, where the loan actually is there to help the investor secure the property and also secure money for the renovations of that property. As long as the ARV is good enough, that money could be secured through financing through one of our partners that we have that do those types of loans. The other thing that people do in that space is fix them to hold them for a rental portfolio. And it's the same type of loan, but your refinance is actually into a more permanent loan for that. Those loans are very, very helpful for people who are investing in single family homes, duplexes, quads, and what have you. So those types of properties fall within that realm and are actually good. That's a good product for those types of properties.
So quick question for you on that one. So is that all one loan, or is it two closings, or is they close one loan and then it draws out and turns into a permanent? How does that work?
It's typically two closings because because the first loan, the fix, buy it and rehab it, is one loan, and then there's another loan that you get for permanent financing on that property.
I got you.
So they're very simple loans, but they're two separate closings.
Yes. So is the initial one, is that an interest only, and then you go into a permanent, like amortized type loan?
That is absolutely correct. Typically, the first loan is a 12 months or sometimes less. It could be 9 months to 12 months. And your objective, obviously, is to get in and get out.
Right.
It's also how you cut your costs on that type of loan. Loans could be anywhere from 11 to 12% interest only during that period. And some lenders actually will allow you to do what you call an interest reserve. So they'll put an interest reserve in your loan so you won't have to make payments for a period of time while you hold that loan. So
I see. And how do you source those interest rates for the short-term notes?
That's out of your reserves, typically out of your reserves. So in fact, one of the qualifications is the lender is not going to be looking at your personal income or your debt to income ratios. Those don't apply in investment lending, but they will be looking at what your reserves are, what your experience is, the value of the property when it's rehabbed, and sort of back into what the lending arrangement will be based on that ARV number. And based on that, then they award you the financing, go to closing. And typically they're not giving you that rehab money so that you can start running. They sort of put it in escrow, and you have to show them your progress on the project, and then they allow you to withdraw from that escrow.
I gotcha. So when you're looking at your interest rates themselves, is that based on the Fed rate? Is it based on the LIBOR? Where do you guys base those rates off of for the short term?
Well, private lending, there is some correlation to the Fed rates, but because it's what we call riskier money, it's typically higher than your traditional mortgage or what have you. Right. And it's a short-term money. So there are no prepayment penalties. It's easier to get because it's not tied to your income and what have you. We can even do people with tarnished credit, like to say. So, but we also, and that product also encompasses some ground-up construction, just FYI.
So it just basically depends on your, I guess, investor as to how the rates themselves are determined?
Yes. Well, some of them are pretty standard. I mean, it's going to be a standard rate because it's a fix and flip loan. It's not going to be your permanent financing rate. It just won't be that. So it's always a higher rate. Okay. But that rate could be anywhere, like I said, 11, 12. And there are some lenders who even go higher than that. But the bigger issue for the investor is what kind of return are you getting on that property? And if those numbers work, they work. And that's your evaluation.
What do you see when you go to the permanent loans? Let's say for an investor who's gotten one of these rehab loans, fix and flip loans, they do their renovation, then they're ready to turning it over into a rental property without the income qualification. What do you typically see those rates running around?
That right now, that's low 8s. Is what it is, so and then higher depending on several factors. But that's a good range, low 8s and a little bit higher.
So that's not too far off for a regular loan, especially given the fact that you're doing people with that don't have the income clear, or what do you call it, the qualification that you would have with a regular federally backed mortgage.
That's correct. It's not based on a person's personal income or W-2 income from their employer or what have you. Or their debt to income ratios. Those things don't come into the equation at all.
Well, so what's the process for like pre-approval for one of these renovation loans, for example?
Typically, the investors bring us the deal, if you will. They either have a contract already, they've actually already identified a property, they've already talked to a contractor about the rehab, so they have that estimate. And they also have some idea what the ARV is. We get those numbers, and then I talk to a couple of my lenders. Once we get some responses from them, then the investor determines what lender he's going with, and we start running from there. We get an application because we don't take an application up front. We sort of make sure that the lender is okay with the deal first, and then we actually start taking all the documentation. It's a simplified process because, again, they're not going to be asking for tax returns and all this stuff. They will pull credit, and there will be a worksheet that talks about experience, but First-time investors are also okay, but they will ask for experience if you have it. And then from there, we gather documents that speak to the entity that we're putting it in. Most of the loans that are done through this vehicle are done in LLCs or corporations. And a lot of the documents that they start to gather actually are centered around that and verifying what your reserves are. Reserves are very important in the process because most of your lenders want to see you have about 6 months worth of interest payments, whatever down payment that's required, and also some of your closing costs. So those are some of the things that they are looking for and looking at as it relates to whether or not these deals can get closed.
So for example, for somebody who's doing a fix and flip, there's really no point in them talking to you before they find the property, or should they speak with you before they go out and start to look?
Typically, we don't get involved until they actually have identified the property, because we really can't do anything. The lender is not going to do anything until he has something to analyze. So once we have the property and we know the ARV and we know the rehab numbers, now the lender can go to work. Prior to that, we're just having conversations, and I can have those conversations, but they're more for educational purposes for the borrower more so than anything else, because we can't do anything until we have a property to identify. Once we've identified that property and you start that process, then everything starts to move. They'll order the appraisal, underwriting will start getting it ready for closing, and they'll start gathering documents from the borrower. And as we do all of that, we get closer to a close.
Gotcha. Well, let's shift gears a little bit and let's talk about the business loans a little bit.
Absolutely.
About your suite of business loans that you guys typically
we have numerous business loans. We have accounts receivable financing, we have equipment financing, we have term loans, working capital loans, we have SBA, and all of those are designed to help the business owners operate their businesses more efficiently, using financing as one of the tools in their tools box to help their business operate the way that they should. What we see in the space a lot of times are especially service-related businesses who perform services for other businesses. They do that on things like invoicing, right? As they invoice, typically those come with terms. Those terms actually delay your receipt of payment. And that creates in the space cash flow problems for a lot of businesses. Well, large and small businesses use what we call AR financing for those things. Typically, people understand it as a line of credit for their business, but it's secured typically by your accounts receivable in your business. And we use that element to actually help facilitate the cash flow items that you're going to need that are recurring and are happening on a more consistent basis than your clients are paying you in the cash that you receive. So we help monetize those receivables is what we do in one instance. And then on equipment, we can do things as simple as a one-page application for people buying equipment to help work through their business. And that could be vehicles, that could be equipment, heavy equipment, machinery, or even furniture and fixtures for a restaurant or a business for that matter. And SBA, we also do SBA products. I'm sorry, I didn't cut you off.
No, I didn't mean to cut you off.
SBA products are great. So, people love them or they hate them, but SBA is a great product for business owners because it's one of the few products that are more encompassing for a lot of the things that people need in a business. When sometimes they're trying to buy a building, that building might need renovations, that building might need to be built from the ground up, but also it needs furniture, fixtures, computer equipment, all of those things, and even other working capital needs can be encompassed in one loan through SBA. And you can't do that with any other product.
How would be the best way for someone who's watching this video to look at the different types of SBA loans that you offer?
The best way is to actually call me and let's talk about what your needs are. Because many times what we see is our customers have an idea of what their needs are, but they don't know all the products that are out there.
Yes.
Right. So the easiest thing is to let's talk about what the need is and let someone like myself or another professional bring to bear to you those products that fit that need. Because a lot of times in the space, what you see as a business owner will always go and ask for what they think they know, right? What they think they want. That could be a term loan or even a line of credit, but that might not fit what the need is. And the need actually should drive the product more so than asking for the product. And we've seen that a lot of times. When they don't match up, you sometimes are actually in need of additional financing faster than what you realize because you didn't solve the problem if you need, So people might be having a problem meeting their normal obligations. Sometimes that's a cash need, but the cash that they get, let's say they go out and they find a term loan to supply that cash. Well, the problem hasn't been fixed by getting that term loan. So now 30 days later or 60 days later, when that cash you just injected into the business is now depleted, you still have the same need because the problem is the payment of how your customers are paying you more so than you having the injection of the cash. So we got to understand what the need is and why you have it. And then we can plug in the right product that fits that. And sometimes that is a leasing arrangement for equipment or another financing arrangement for equipment or a line of credit or AR financing or an SBA loan or a real estate loan.
So if I'm hearing you correctly, what you're telling me is if it's a business type loan, they need to come talk to you first, kind of get your scope.
Yes.
Of what is going on. But if they're looking to do a fix and flip or something like that, go out there and find your property, then put together the package for the construction and what you think it's going to bring you in, and then bring that package to you, Ray, to take to your investors to figure out which product works. Is that correct?
Absolutely. Because that's how we can work better for you, is what we can do.
Well, and flip it back to the real estate loans.
Sure.
When you do a fix and flip loan, what's the typical timeline from like loan application to getting that closed?
We can get those closed anywhere from, depending on the lender, as little as 2 weeks to 30 days.
Okay, so 14 to 30 days is going to be something people could expect to be a norm?
Yes, that's 30 days or getting closer to 30 days is the norm because depending on the lender, again, some lenders require an appraisal and some don't. If they don't require an appraisal, that timeline is actually compressed, right? It gets smaller. But if they do require that appraisal by itself could take 2 weeks. So that pushes out your time to close. But all of them can close. A fix and flip loan can close within 30 days.
I got you. And I'm assuming that there are different time frames on your business loans. For example, would an equipment loan be quicker than an SBA loan? That kind of stuff?
Absolutely. Yes, it is.
There's no paperwork involved with SBA, is there?
Oh, yes. Yes. I think that's one of the biggest things that people have against them, quite frankly. Yeah. But if it helps your business, it's worth filling out that paperwork. We got 2 loans approved yesterday that are SBA loans that are pretty nice size loans. An SBA can go up to $5 million for business needs, and it can get larger depending on if you use a 504, which is a different type of SBA type of loan. So yes, there is some paperwork required, but it's things that we should have access to anyway. So it's not cumbersome.
My experience with SBA, and you correct me if I'm wrong, is that the terms are typically a little bit better than what you would find in a general marketplace for a business loan. Is that correct or not correct?
Yes and no. I think that some of the fees could be a little higher because of guarantee fee. Mm-hmm. That fee is typically a little higher. The rates are tied to prime. So, right now they're a little higher than what people want to see. But I think also even in the traditional banks, those loans are higher right now also. But the SBA loans is a more encompassing loan. If you went to a bank and say, hey, I need money for XYZ, the scrutinization that you receive is going to be severe because you're asking them to supply you with funding. SBA will still have the same severity of scrutiny, but they're also more forgiving in terms of what you have and don't have, and they can do more in that loan than your traditional banks can do.
And a lot of times the SBA is non-recourse. Is that not correct?
Many times it's full recourse. It's because it will ask for a personal guarantee of the owner. Mm-hmm. And many times, not all the time, but sometimes they actually will also encumber your personal residence and what have you as part of collateral, because many times the loan amounts aren't fully collateralized by what your collateral is from the business. So
that's good to know. I can remember I did one for an office building a few years back, and they did, I guess the primary bank did 50%, and then the SBA guaranteed another
40%.
Yeah, and then
that's a 504 loan is what that is.
And the 504, that was, as I recall, that was a non-recourse if you defaulted on the.
That's a particular type of SBA loan. That's not a 7A, for instance.
Right, and
7A is
based on what you think your company is going to grow to be, correct?
That's correct. That's right. You can do it off of projections.
Yeah, off of projections.
Yes, you can.
Good. Well, so during the process, I mean, obviously the longer processes like the SBA, is that something that you guys kind of help people, guide people through to the applications on?
Yes, we do. We again, it's sort of it's not a. The process is they come to us with a request, whatever that is, and we sort of dissect that request, get some initial documents up front. Typically, those are tax returns and current year financials of the business, personal financial statements, and then a sources and uses type of worksheet that says, here's what we want to do. And we present that to our lenders. And from there, we get an approval. The LOI is then signed, and then we start running and getting additional documents is what we start doing. So, and that initial LOI, getting to the LOI could be 24 to 36 hours for us to get that once we have a full package. That package, once we have that, then we're off and running. And from there, once we sign the LOI, get the deposits in, it could be another 2 months before you close.
Gotcha. Well, I guess that brings me sort of to my last question, which is, what are you seeing out there in the marketplace with investors and business owners? How is their sentiment? How are they feeling about the market? How are they feeling about business? How are they feeling about, doing more properties, even at a little bit higher rates?
We are seeing a lot of activity is what we're seeing. We're seeing a lot of experienced investors doing what we call cash out refis is what they're doing. So a lot of them are taking the equity that they have in their properties, preparing for additional properties is what they're doing.
Yeah.
And then we're seeing builders do a lot of ground up. They're very active in that space. So we see a lot of activity there. And as I say to people all the time, even on the business side, businesses don't stop doing business just because we're experiencing a decline or a recession. There's still a lot of business that's going on. There's still people buying businesses, expanding businesses, and performing very well. So a lot of things don't stop. It slows down in some spaces, but when it slows in one area, it also picks up in another. So investors are extremely active right now. There are a lot of deals out there for fix and flippers. There are a lot of deals for if your objective is to buy it and hold it. There are a lot of deals out there. There are a lot of people who are staying active no matter what. And if that's their livelihood, there's still a lot of money that we have that can go to investors on the properties that are out there that people want to actually exchange in one way or another.
Gotcha. Well, Ray, this is a lot of great information, and I hope you and I can connect also, like we talked about the other day, on the outside of this call and talk about some of these things. Is there anything else that you'd like to add that you'd want our audience to hear before we pop off today?
Well, certainly, I appreciate you giving me the opportunity to talk about Barrington, my company, and what we do and how we go about serving our customers. We have tons of funds available for borrowers in the investment space. Tons of funds.
Tons of funds. Y'all heard that, right?
Yes, we have tons of them. What the qualifications are for those funds, and make sure that you're getting good advice. I'm not always the best source, if you will. If a person is not prepared, we let them know that. And also many times we send them back to their financial institutions and talk to them about how to negotiate that to have a successful outcome with that financial institution. So we're not so tied to, you have to do business with us. We try to help you achieve whatever your goals are.
Okay, and that's great information. You guys, we had a little bit of a glitch before where you timed out there, Ray. I think it just went out, but he basically was saying, contact you directly to find out what works best for them specifically.
Sure.
Ray, thank you so much. I really appreciate your being here today. It's been a wealth of knowledge, hopefully for myself. I mean, definitely for myself, but hopefully for my audience as well. And for our audience out there, as always, if you do have any questions, don't forget to comment those below the video, and we'll be more than happy to get you the answers, or reach out directly to Ray or myself, and we'll be more than happy to get you on the phone, do a personal conversation, and help you a little bit more figure out exactly where you need to go. And as always, if you did find this video valuable, please consider giving it a like and sharing it with your friends. And if you haven't already, consider subscribing to my channel and clicking that little bell button to be notified when those new videos come out. We've got great content coming out all the time, and you do not want to miss a single thing. And thank you so much for joining us today. I am so glad that you were able to join us on this video. And if you did like this video, I know you're going to love the next one that pops up on your screen.